Hello friends, in the series on the income tax cases, today we will discuss a very important case on section 43CA. The provisions of section 43CA has the provisions which are very much parallel to section 50C provisions. Section 50C is applicable for the transfer of the capital assets and section 43CA is applicable in those cases where the immovable property is held as stock in trade. In the present case, the issue before Delhi ITAT was that if the assessee sells some land which he was holding as a stock in trade, for which the memorandum of agreement has been done in 1991, but that property has been transferred from leasehold to freehold in 2013-14 previous year. So whether for calculating the gains, the stamp duty valuation on the date of conversion or on the date of earlier memorandum of agreement is to be seen. This issue has been taken up by Delhi ITAT double bench in the case of Mussorie, Dehradun Development Authority versus Deputy Commissioner of Income Tax. And this case is reported in 123 ITR Tribunal Short Notes 14 and the date of the judgment is 19th February 2025. In the present case, the assessee is a body corporate which is registered under the State Urban Planning and Development Act 1975, and in the year 1991 the assessee has entered into a memorandum of agreement on 12th July 1991 for giving a piece of land on lease to a state government corporation. After that, in the previous year 13-14, which was relevant to the assessment year 14-15, this leasehold land was converted into freehold and the assessee received some freehold charges. Because this property was converted into freehold, the notice was issued to the assessee for the scrutiny proceedings, and in the scrutiny proceedings the assessing officer was of the view that property has been converted from leasehold to freehold, and in that case the assessee has to pay the tax according to the stamp duty valuation as on the date of the conversion. But the submission of the assessee was that since this property has been given on the date of memorandum of agreement on 12th July 1991 and most of the consideration was received in 1991, so the stamp duty valuation of 1991 is to be seen and not of 13-14. But the assessing officer was not convinced and he calculated the gains as per the stamp duty valuation on the date of the conversion from leasehold to freehold. Apart from that, the assessing officer also made the addition into the income of the assessee of the freehold charges received by the assessee. When the assessee filed the appeal before the CIT appeal also upheld both the additions done by the learned assessing officer. So when this matter came before the tribunal said that the facts make it very clear that property has been transacted in 1991 and most of the consideration has been received in 1991. So as per the provisions of section 43CA, the stamp duty valuation of 1991 is to be seen and not of the financial year 13-14 relevant to the assessment year. So the learned assessing officer has erred in calculating the gains according to the stamp duty valuation of the previous year 13-14. But on the second issue, that was the freehold charges received by the assessee, those charges which were received for converting the property from leasehold to the freehold, that charges has not been included into the income of the assessee by the assessee. So for that, the tribunal said that the assessing officer was justified to include that charges into the income of the assessee and upheld the addition to that extent and deleted the addition made under section 43CA. At the end of this video, once again I am repeating the name of the case. The name of the case is Mussorie Dehradun Development Authority versus Deputy Commissioner of Income Tax, and this case is reported in 123 ITR Tribunal Short Notes 14, and the date of the judgment is 19th February 2025. Thank you, friends.